Sure. We understand that we could have studied finance in the past or maybe ongoing. However, let's give ourselves an opportunity to maybe start it from the scratch and build on some more topics and also connect few dots wherever it is required. Feel free to explore me to the best possible and let's do it together because we have vast experienced participants from different locations and so on. So, first things first, I hope this is not your first session. Anyone?
No, sir.
Not the first one. Not the first. There are already sessions which has already happened, right? Right,
Absolutely.
Absolutely. Wonderful, I'm sure.
I mean, related to finance, this is the first one.
Related to finance is the first one. Thank you, sir. Feel free to call me Gaurav because it's not about corporate, it is the school of thoughts which I come up with. And that let's make an healthy environment and echo each other. I try to assume less things and being more practical. And with accounting, definitely, and with finance, definitely. Wherever assumption is required, I'll immediately declare it or share it. However, everywhere we'll try to be with facts and figures and so on and to club it with that thing too. How many of you in your life have seen annual reports of any of the company? Can I see some hands confirmation? Okay, I can't see which is virtual, but you can raise your hand, e-hands like that, so that I would be able to get a count of this too. Correct. We have Kritika. Okay. Sirazul, I'm sure. Right, Piyush. I can call you Piyush, sir. So that is also okay. Perfect. Thank you. I appreciate that. So, thank you. There are 13, 14 participants and people who are from finance also. People who have already completed their MBA, they must have also seen financial statements. There are important things which have already come up in the financial statements also. I appreciate that. Thank you. Thank you. You may lower down. We'll talk about the financial statements also. We'll talk about why we should prepare and what we should look into. See, honestly, guys, I got only effectively 1.5 hours. And I don't call it I got 1 hour, 1.5 hour. I call it we have another 1.5 hour to go. And let's make a best out of it. Sounds good? Sounds good?
Sure.
Please grill me to the best possible you can, so that I'll be a bit pink or red while going to the next room. Okay. On the lighter notes, but yeah. So feel free to ask question in between, so that and be less dependent on chat, be more dependent on the mic. These are just basic hygienes which I'm sharing there, so that it helps us to interact better. I'm going to share a couple of things with you, small PPT. Basis that will be building on the concept and context. Today's session, I am keeping it a bit lighter session. Lighter in the sense, it could be a brush up of the previous concepts for few of them. It could be connecting of the dots, or it could be people who are starting it fresh. It would look like that this is something which is easy to go ahead with. There are less calculations, more of understanding. Definitely everything will be backed by few calculations. One practical example we will also be doing today, related to a listed company. Tell me honestly, how many of you are afraid of seeing the financial statements? Is there anyone? I know people will not raise their hands because people don't want to go ahead with that. That prasanna, that will go away today. And make sure that these financial statements are our own friends to analyze it further. Sure? Sounds good? So, I'll just share my PPT screen. I'm just sharing a screen. Let me know once it is visible. Any confirmations would work.
Yep, can see.
Visible? Visible. Okay. So, as the name suggests, Hanji, and I'm sure everyone is there with pen and paper, no need to ask for it. Feel free to jot down few points. Wherever I say that yes, this is important, also jot down. Anyhow, this deck will be shared with all of you as a part of the curriculum or content. However, whatever we write, it's not about old school, it is a best methodology. Whatever we write, it has a better intake, better memory catch. Correct? So let's take it forward, friends. From here, basics of financial statements we'll be talking about in today's session. And however, along with this basics of financial statement, we will be covering industry related jargons, so that tomorrow, day after, if you are sitting with any of the finance expert or any of the finance person, so instead of only knowing this, the name of the jargon, we understand the meaning of it. And also how to respond to that something specific which is there. Suppose IRR is there, or say NI is there. NI stands for net income. So top line, bottom line. These are few jargons which will be helping ourselves to get comfortable, and also to get more info related to that. Basics of financial statement. Can I hear loud from all of you? How many types of financial statements are there? The name of the financial statements. Please go ahead.
One thing I know is the P&L is profit and loss account.
Wonderful. Thank you. What else? Yeah, go ahead. Don't wait.
Trial balance.
Balance sheets.
Balance sheet, trial balance.
Balance sheet, trial balance, P&L. I'm writing it. Okay, anyone?
Cash book, bank book.
Cash book. Okay.
Notes to accounts.
Sorry, which two accounts?
Now, notes to accounts.
Notes to accounts. Okay. Okay. What else? Cash flow statement, transactions,
Profitability ratios.
profitability ratios. Oh, wonderful.
Balance sheet, profit and balance sheet. Vishnu here. Balance sheet, profit and loss statement, cash flow statement, and notes to accounts.
And notes to accounts.
Solvency ratio.
Solvency ratio. That is Sandhya. Okay. Solvency. Okay. Anything else? I guess we are good.
Cash flow statement.
Debt and reserves ratio.
Debt and reserves ratio. Okay. Thank you. Thank you.
Cash flow statement.
Cash flow statement. Okay.
Balance sheet.
Anji. Okay. Sure. So please keep it on mute so that my voice should not echo. That is the only reason. Thank you. Question. What is the question? Question is basics of financial statement. Under basics of financial statement, what are the types of financial statements? So please help yourself write down types of financial statement. Write down types of financial statement. There are 3 types of financial statements, not analysis. Okay, let's come to the analysis later, or we will go on that later. 3 types. First is balance sheet. The name in itself, sheet, which is balanced both the sides, just like LHS is equal to RHS in your simple technical language. And it must be, not should be. So if I have 100 of assets, I have 100 of equity and liability. I'll share it with you. So balance sheet, which is balanced both the sides. What are those 2 sides? One is asset.
There is equity and liabilities.
One is asset. Asset equals to equity and liability. Wonderful. Okay, I have detailed part of it in the upcoming slides. I'm just helping you all to just pin down a couple of things. Second financial statement is profit and loss account or income statement. Or income statement. So it is known by 2 words. Even balance sheet is also known by 2 words. One is the balance sheet itself. Anyone from the audience?
Asset and liabilities.
No, it's not. So asset and liability, these are the components of balance sheets.
Okay.
Sure. But good attempt. So there is no wrong answer in this discussion, everyone. Even in our session, no wrong answer. Hit it. Okay. The second name is statement of financial position. Please help yourself write down.
Sir, I had a doubt.
Just a second, Bhomik. Hanji.
Yes, sir.
So second name of balance sheet is statement of financial position. The objective of balance sheet is to talk about or to find out the health of the company. In bracket, you can write down health of the company. how healthy we are. Means the current status. If you would like to check your own health, then what we do? We check our BP, we check our sugar level, we check our EC, whatever, means current status. Now, if you have to run or if you want to go ahead with 1 kilometer, 2 kilometer walk, that is known as a performance. So, PNL, profit and loss account, popularly pronounced as PNL, helps us to find out the profitability of the company. Yeah, may I request everyone to please put it on mute? Narendran, thank you. So, profitability of the company. Third financial statement is cash flow statement. And the name in itself helps us understand it, which talks about inflows and outflows of cash. So you may write down specifically inflow, outflow of cash. To support these documents, to support these documents, there is a specific thing which we prepare, which is known as notes to accounts. So maybe in your examination, you must have prepared working notes to prove it that this is the reason that how I got the number, right? So those notes to accounts are none other than rules and regulations followed to prepare financial statement or to prepare above 3 financial statements. Sure. Yeah. Someone was asking a question. Sorry, I would like to get back. Hanji.
Sir, I had a doubt.
Hanji Bhaumik, go ahead.
Sir, what is the difference between statement of accounts and balance sheet, or one and the same again?
Statement of accounts.
Yes.
So under the statement of accounts, there are 3 financials. So statement of account is none other than financial statements.
Okay, so it is
Hanji.
Okay.
Yeah. So that was more basics, but actually we call it FS. F/S. FS stands for financial statements.
Okay.
We all are good, everyone? We have penned down 3 things. One is the type of financial statement, the name of the financial statements, and what is notes to accounts.
Hi, Kapil here.
Hanji Kapil.
Notes to account.
Sorry. Notes to accounts mean these are the rules and regulations followed to prepare financial statements.
Okay, thank you.
Okay.
Sorry, one quick question, if I may. So the PNL, doesn't it talk about the cash flow as well? Because the PNL that we make in the retail or F&B retail that I work for, we even talk about the cash flow in the PNL itself. So the PNL does not talk about cash flow. Is it a separate report altogether?
It's a separate statement altogether, Prasanna. And PNL gets prepared using accrual accounting. Means once it is due, whether it is paid or not, subtract it.
Correct.
For example, I'll just make sure. Tomorrow you have made a sales. Suppose you sold something to Gaurav, but Gaurav has not paid it to you right now. Gaurav will pay it the next week. But the sale is done. So this is accrual transaction. Are you in, Prasanna?
Yeah.
Top line is already hit. Top line is added. But what about, but if you see a cash flow statement, in cash flow statement nothing is received. Received is 0. Correct?
Understood.
That's why we prepare 2 different financial statements. Prasanna.
Got it. Thanks. Thank you.
Everyone, please write down for notes to accounts, one more line related to for notes to accounts. These are nothing but the accounting standards, popularly in India is known as IND AS. IND in capital, IND-AS. AS. Indian Accounting Standard. Every listed company in India has to mandatorily follow Ind AS to prepare financial statements. Okay. Okay. So, yeah, I would request everyone to please put it on mute. Thank you. So that there won't be any background noises and so on. Yeah. So we have 5W and 1H framework. What is this 5W and 1H? There's someone who is from communication, right? If I'm able to recall.
Yes, 5Ws in 1H. We were told how to, this is the basics of our report writing.
Correct.
What, when, who, why, where, and how.
And how. Wonderful. So what constitutes the financial statement? Thank you. Followed by who prepares financial statement? Why are financial statements prepared? When are these statements prepared? Where are these statements available? And how are these statements prepared? 5W and 1H question. Okay, so don't write these things, okay? Anyhow, this deck would be there with you. Write something which you have learned something new, or it's a takeaway for you basis any of the slide. And wherever I put a stress that should write, then in that thing it is a recommendation. Please write it for your reference. And it is for everyone, no exception. Once we write, we've been able to recall rightly, and we have a better memory to actually back that same thing up to. Thank you. Sure, let's take it forward. What constitutes financial statements? Income statement, P&L? Can someone tell me anything else? Here is the first question which I asked. So what constitutes financial statement? There are three types of financial statements. One is income statement, another is balance sheet, and another is, last one is cash flow. Are we good? Everyone? So what constitutes? We have written it here. One talks about health, one talks about performance, one talks about movement of cash, which is inflow and outflow. That's it. Every statement has its own importance, and every statement is linked with each other. The final outcome is in balance sheet. However, these statements are being prepared in standalone. These are interlinked with each other. We will see to that thing gradually over a period of time. But these things something talks about. Let's take it forward from here. And so who prepares financial statement? All entities are mandated to file audited financial statements. So I'm not reading everything. Yes, it is mandate as I shared with you. For whom it is mandate? It is mandate for all listed companies. Okay, it is mandate for every company. However, Ind AS, following Ind AS rules and regulations, is mandate for all the listed companies. Okay. Second is why are financial statements prepared? To talk about the health of the company and many more, and also to showcase our performance publicly. So why my marks are important? Should I be just a topper in the class that has solved the purpose? Answer is no. It could be an internal purpose. There are external purpose also. So internal means let people also get impressed and see that how I performed and so on. Also how it is going to showcase more or get more opportunities for me in the market. Same goes with the company. When they talk about their own financial statements and put it across on the website as a financial reporting, other people perceive it that yes, this is the right company to invest in. So to that they attract prospective customers. When are these financial statements prepared? Minimum once in 1 year. However, company has a choice to prepare it every quarter. And to talk about that, yes, every quarterly we are preparing a financial statement. I've seen the same thing as every quarterly reporting in detail for US listed companies. For UK listed companies, it is more semi-annual, which is IR. We call it interim report. For Indian companies, we have majority of the time the annual reports. No interim report, no quarterly report. They could be announcing few numbers in the quarter results, could be revenue or anything else, but no detailed with notes to accounts. Hence, an annual report and annual results, not only in Indian companies internally in India, across globe, even companies actually looks forward for, or investors look forward for. Now this company has announced it. So listed entities need to file with stock exchange and audited annual accounts within 60 days and interim financial statement within 45 days. So this simply says, friends, today suppose it's 31st of March and the financial year is closed. 31st March, evening, night, 12 o'clock, closed. Even sale, purchase, everything. So what would happen first thing in the morning tomorrow, which is 1st April? The financial statement, financial results will come up. So those are ready with the company. Those are always ready with the company. However, what is the genuinity, accuracy of those numbers? Whether those numbers are inflated or forced or accurate, who tells us? So I have written my examination best. If I'll give to my parent, they will give me better marks or good marks or 100 on 100. I should get it checked from outside who is not only the person who is going to give me marks, but also who is an expert in that. Means my prof or anyone who is from outside would help get the same thing done. Checked. The marks which was being provided by them is something which would be unbiased, audited and unbiased. That's why companies like auditing companies like KPMG, Deloitte, PwC, EY and GT. So these are big 5 companies globally who audits these financial statements. That's why we do not go into questioning this number, that what is presented by the company. We see in the annual report that who has audited this number and hence this number is presented. And where are these statements available? These statements are available, of course, on the website of the company, on the stock exchange where they are listed. If it is private, then there are paid website that Pofler.com where these numbers and these particular financial statement would also be available. And how these statements are prepared as per the Companies Act, as I shared with you, Ind AS. For US, it is US GAAP. Hence, these statements are prepared in line like that. Before moving to the next part, so I'm just stop sharing a screen. So I'm just taking a pause, but anyone has any question so far? Good side for FS of private companies. Yes, please. Probe 42. Yeah. Okay.
What is revenue realization?
Revenue realization. Okay. So revenue, first of all, revenue means sales. Sales which is P into Q. And when I say that some company has already sold out some goods, it could be in cash or in credit. Either way. So if it is cash, it is realized. If it is credit, it is something which is realization. It would be realized in future. And revenue realization is an accounting standard which helps us to understand, sir, that what are the rules to be followed to put the revenue in the books. For example, I have mailed you, sir, this much of, say, 100 of these pens are required. Is it a revenue for you? You are seller of this pen, assume it. So, is it a revenue for you? Okay, Gaurav has given me an order, revenue. What are the terms? When it will be delivered, how it will be delivered, what are the freight charges, when you will be making the payment, whether it will be advance, whether it will be token money, whether it's some amount. All those terms and conditions. Followed by, it talks about an important thing that how the consideration is paid, means both the sides. Means whether the contract is already executed, where will the delivery will take place, when it will be taking place, all those terms and conditions. So we talk about an accounting standard says that if those terms and conditions are intact, then it's Ranjit's company who would realize the revenue in the books. It's a standard, accounting standard. Session is not an accounting standard, but I just thought to share details.
Usually during the quarter closing, we'll be informed to close the sales 2 days prior.
Close sales, but not get the revenue, not get the cash. right, sir? So close it so that they put it in the say that yet it is not an influenced or biased thing with that we wanted to get it done. Because next 48 hours, there is no change in this. There could be a possibility that Gaurav will say that, okay, sir, I'm cancelling my order. It was just to inflate your sales, to meet your own targets. Just like 11 o'clock in the night, Ranjit has got a mail from Gaurav, okay, and the next day in the morning, I have just cancelled it. So this quarter, your revenue is increased. That's how we also call it. So there are accounting rules and being more authentic into that too. Ranjit sir. Thank you. Hanji, anyone else? Any questions? Please, unmute and share. Avinash, Hanji. I could see your hand.
Hi, these financial statements are, see, for example, there is a company which is having operations in out of India.
Okay.
So in that case, they have to do the financial these statements within the in India or in the out of India presence also.
Both.
Okay.
However, they have to consolidate it, prepare it, and show it as a one number in the Indian company point of view, or in the Indian financial statements or INR. Reason is because its corporate office is in India, listed here. So it is Indian company's responsibility to prepare it, and it is the other country's responsibility, say UAE or UK, prepare as per their accounting standard and followed by share it with Indian company, so the Indian company would audit and club it and show it as one number. Okay.
Okay, but even in that company, say suppose my company is in India and as well as Dubai. So in Dubai also I have to do this financial statements, everything, right?
Everything. Whether you're listed or not, that's a separate story altogether.
Okay.
Sure.
Irrespective of listed, the auditing, everything has to be done. Okay.
So it's just like how you've been able to find out your own profitability.
Yeah.
Tomorrow day after,
Company is
you are just
listed.
studying, no examination. What is the purpose of it?
Understood.
Okay, simple way. Yeah. Okay.
Yeah.
Thank you.
Yeah.
Everyone, I have shared one document with all of you in the chat. Please help yourself download it right now, and please put it on mute if there's no other question. I'm sure all of you have been able to access it. Download it and save it somewhere wherever you are actually maintaining this folder. So if you have ever seen financial statement or annual report in detail, it's okay. If you have not, that is also okay. Today is the chance to cut the ribbon and we'll do that. Sure. Others can confirm me once you have downloaded it and it is accessible. Sure.
Yep. It's done.
Thank you. So, okay. What about others? 2, 3, 4 announcements have confirmed me. Thank you. Yeah, why not? Yeah. So I'll
Yes,
just also
able to.
open it. Okay. So I'll just also open it here. Sure. Okay, I'm sure everyone has got it. So now I'm just sharing my screen. Yes. Please confirm me and everyone or anyone. Is it visible clearly?
Yep.
Yeah. Okay, thank you. So first things first, annual report, as I shared with all of you, that companies, please put it on mute, thank you. So the companies which are listed company in India has to mandatorily prepare these financial statements, and this is Indian listed company financial statement annual report. How to download, where to download, that is also very easy. Let's scroll down and come to the second page and see extreme on the right hand side. You could see the table of content where it talks about the about company, our strategy, value creation. There is a specific section dedicated on value creation, cultivating, committed to zero harm, and so on. And there is a business strategy and many more things which are happening here. Right. So we have our financial statements here. Financial statements, so we have two types of financial statements, friends. One is a standalone, one is consolidated. And when we see or when we say consolidated financial statements, you may please help yourself write it down. Consolidated means what? Consolidated means it's a summation of parent company and subsidiary companies together. So parent company number plus subsidiary company number shown as one number. And what is standalone? Standalone means it is the parent company's number only. Means it's my number only. Okay. Okay. So there are two types of financial statements also. Types means the way it should be presented in the financial statement. So I will be showing and adding my own performance, and also I will be adding the performance of companies which Anand you were asking. So which are located in different places or not in different places but within the same country or within the same city by known by another name and controlled by me. So when I say subsidiary company, what is a subsidiary company? Anyone from the audience?
A company where whose parent company is having major stake.
Okay.
There is some percentage of stake they have to hold. The parent have to be called the parent company. I don't remember the number.
Entity to on the parent company behalf.
Hello. The parent company, the company is a subsidiary company is a business that is owned by the or controlled by the parent company.
Okay.
Different kind of business, but owned by the parent company.
Owned by the parent company. Okay.
Something like what I know is Interglobe Aviation has Indigo Airline. It has also its software and finance and other different parts of that company. They all come under Intergroup Aviation.
Okay.
Yeah.
Please.
That's a subsidiary company is a company incorporated by another company, wherein the another company hold at least 51% of the shares.
Okay. Thank you.
Can I?
Please.
Parent company is a company, listed company, and the subsidiary companies is like, one parent company have multiple logos or multiple companies under same company, parent company.
Okay. Thank you. Anyone else? Any other thoughts? Yes, Shailesh. Go ahead.
Parent company is a group, what you say, and different verticals. For example, if we take an example of Tata, so Tata is a brand and it is a parent company, where the verticals like maybe it is automobile or maybe it is a retail. So that's are all the subsidiary companies.
Okay. Sure. Thank you.
So can I?
Hanji.
Yeah, a parent company is they have a parent and a subsidiary company. They have a hierarchical business relationship where the parent company owns a controlling stake in the subsidiary.
Right. Okay. Thank you. Yes, we all are done. Thank you. maybe you all can just write down. Of course, your answers are in line. So, subsidiary company is a company in which parent company has. Write down this thing for your reference, please. Subsidiary company is a company in which parent company has more than 50% stake. That's a simple definition. Hence, it is controlled by a parent company. So when you have a majority stake, in that case, it is controlled by the parent company. So if I'm company B, you all are company A, I have 100 shares. If you have 51 shares out of 100 shares with you, now in that case, I will become your parent company. I will become your subsidiary company. You will become my parent company. Okay. So the moment there is a parent and a subsidiary relationship, so you will be preparing your own financial statements, I will be preparing my own financial statements. The second step would be, since I am controlled by you, what is the meaning of a control here? Control means related to operational decisions and finance decisions. Okay. So tomorrow day after, I want to open a new branch in say Bangalore. I am your subsidiary, 51% stake. I want to open a new branch in Bangalore. Can I do it without your consent?
No.
No. Answer is no. Can I declare dividend without your consent?
No.
No. Okay. No. Even if I'm meeting with other different clients, I should be keeping you in loop every time because I'm controlled by you. That's why it is operational and financial control. So once any company is there, which is subsidiary company of a parent company, so in that case, you will be preparing your own financial statements, plus you will be preparing a consolidated financial statement. This is also the duty of the parent company. Subsidiary company will share its financial statements to the parent company. Hence, so when I say standalone means your own number, my own number. However, when you are preparing your consolidated, it means there are one or multiple subsidiary companies whose numbers are also added in this financial statement. Let's just have a look at it. What is consolidated and standalone financial statement? How they look like? Hanji Shailesh, I could see your hand is raised.
Yeah. If one JV is between two companies and one of that company is having more than 50% of share, it means the parent company is always who is having more than 50% of shares.
Okay. So
is it
Hanji Shailesh. So subsidiary rule and parent rule, which is consolidation and standalone rule, does not apply to JV, joint venture. It's a venture which is done jointly. These are not the two companies coming together and doing their whole business together. So they come up for a one specific project, Shailesh. And that project, if the objective of the project or the purpose of the project is over, the JV is also over. In case of a subsidiary and a parent company relation, it is existing till the time both the companies are existing. Are you with me, Shailesh? So JV is for a specific purpose, and there is a JV Act.
Okay.
Here it is Companies Act. So even if in the joint venture, suppose me and you both have joined hands, you have invested 80%, I have invested 20%.
Okay.
So it is a joint venture. Joint venture cannot be every time 50-50. Venture which is done jointly. So in that case, I have invested 20% in the project, you have invested 80% in the project, that is okay, that is joint venture, that's it. I have no stake in your company, you have no stake in my company. In the project, we have invested this much.
But as a business, they also need to maintain this financial statement.
Yes. So out of that profit, Shailesh, I'll just complete this. Suppose the company, that JV which we both created, have generated say 50 crore rupee profit. Okay. What was your percentage stake in that? 80.
80.
Assumed number.
Yes.
So out of 50 crore, how much will go to your pocket? 40 crore, correct. 80% of the 50. So 40 crore would be known as a profit for you earned from joint venture and associates. You will show in your financial statements.
Okay.
Correct. And same goes with me. I will showcase 20%, which is 10 crore rupee as a profits in my books.
Okay.
Sure. I'll show this example just in the next part. Hanji Abhishek. Thank you, Shailesh.
Just a question, just to clarify. Suppose I have a company, listed company. Can I also have different brands or different type of business under that listed company?
Yes, why not? Aditya Birla had different brands.
No, I was just asking because I have a company, listed company, and I have two different brands.
And
two different businesses basically.
Mm-hmm.
So I just wanted to clarify.
So what is the name of the company, if you could tell?
Yeah, it's HUMNTN Ventures Private Limited.
HU
M as in mango, N as in Nancy.
Sure.
TN Ventures Private Limited.
Ventures Private Limited. Okay.
Yep.
Company can have. Right. I'll share one. Hanji, I can share one classic example with you.
Just one question before you give the example. So in that case, for example, as I mentioned, I have different logos in a company, and these are the different businesses actually. So do I need to prepare financial statement as one, or do we need to prepare the financial statements, for different logos, different financial statements, something like that?
No, not required. It's a one company. Prepare for one.
Okay.
Those are the brands, right?
Yeah.
Or those are the logos.
Right.
So until those companies are separately established. That's what I'm saying. That's a classic example of that. So we have our Tata Motor as a company, correct everyone? There is one more brand which is an international brand which is owned by the Tata Motor. Can someone tell me what is that brand? JLR. Is JLR a listed company in India? Answer is no. JLR is a 100% owned subsidiary company by Tata Motors. So though JLR is a brand, but they have not put it across as a company, because this is something which is not even merged. It is acquired by Tatas. Now they are encashing its name, and now they are building on it. Another example. You have heard about a company namely Eicher Motors.
Right.
Commercial vehicles, even bus, trucks, and so on.
Yeah.
If I tell you the Eicher Motor also manufactures bikes, have you seen a bike outside? Here is a catch. They have Royal Enfield. Yeah. So Royal Enfield, friends, is 100% owned subsidiary of Eicher Motors. So brands are popularized differently. Why we buy the brand directly? Because we want to encash its name across. Okay, this is related to product. I'll talk about service right now. So companies, if they are acquiring a brand, they want to encash it for the life. I'll talk about a service. How many of you uses Microsoft? Everyone. How many of you have LinkedIn account? Can I get some confirmation? How many of you have LinkedIn account? Everyone?
Yes.
Yeah, even I am also there on LinkedIn. We are all there on LinkedIn. Correct? Tell me, LinkedIn is acquired by whom? What is the parent company of LinkedIn? Microsoft Services. Microsoft did not name it Microsoft Social, Microsoft Professional Network, because they wanted to name the name of LinkedIn as a brand. Are you with me, everyone? So this is the way it actually happens. Why you are acquiring another company? Is it vertical expansion or is it horizontal expansion? When I say horizontal expansion, please help yourself write down. When I say horizontal expansion, so horizontal expansion means that you are expanding in the same business, similar business. Okay. So, by any chance, any of you heard about a steel company, namely Bhushan Steels? Right? It is not existing today. Why? It is acquired by Tata Steels.
Some part was acquired by Tata and some by Jindal.
Majority acquired by Tata. Now it is done. Now it is merged. So they want.
Bhushan was my first company I have started my career with.
Oh, wonderful, wonderful. That was Saurabh, Sudeep. Sudeep, very good, Sudeep. Sudeep, come on camera. We'll take one picture with you. Related to ex-Bhushan. I just want to lighten that. I'm just sharing it. But Sudeep, I visited 3 plants of the Bhushan. All 3 plants. Angul, Saibabad, and there is one more on the Mumbai-Pune highway. Khopoli.
Yes, and actually the company was in the name of 2 companies. One is Bhushan Steel and another one was Bhushan Power and Steel.
Power and Steel, correct.
Exactly.
So, yeah, so you must be knowing the Tata Steel's purpose behind acquiring which company.
Yes.
So, thank you, Sudeep. Thank you so much. So friends, we should understand if we want to expand our current business, there are 2 ways. One is you invest more capex into it. It's just like you have your own house, roof is blank, intact, there is no room. You are expanding one more floor in the roof. That is horizontal expansion. Horizontal means the same घर. Second is you could also expand into new asset. Same asset, horizontally, you can acquire one more house. Bana banaya ghar. So that is easier, faster. Like what Tata Steel did. They acquired Bhushan Steel. That was easier, faster, immediate expansion. Hanji Vishnu, please go ahead. Hanji.
Since if I may, since both of you are from X, you might need to recently understand this company was acquired by Tata Steel, Bhushan and Power both, and also there is some litigation recently about this acquisition only. Maybe if you can just share some insights if it is relevant. Because there was some dispute on NCLT and
there was. So now that it is merged, but those 3 small disputes keep on going until and it's a Tata Steel, which is a big brand. And it took 3 to 4 years to complete that acquisition.
So the question is basically clarification. Whole steel business was acquired by Tata and whole power business was acquired by this thing Jindal. That's just wanted to understand on this.
So I guess whole steel business was acquired by Tata. Complete all the 3 plants, big plants. And Angul, Odisha, there is a very big plant there. Yeah. Okay. So let's take it forward. I guess there are more questions which I would be happy to entertain. Let me just share with you. Let's just click on this consolidated. I'm sure my screen is visible to all of you. Let's just click on this consolidate. Let's just come down. And you will see the name of the auditor also, first of all. So the current auditor of this company is none other than PwC. It is increasing. Yeah. So as we could see, the name of the auditor is PricewaterhouseCoopers and so on. Okay. So the current auditor of Tata Steel is this. Now, so every report is audited, as I shared with you. Every report is audited and then published, rather than published and then audited. There is a purpose of audit. It's just like we have checked it thoroughly. These numbers are intact. Now it is available. Now it should be available for the people who have interest in this company. So for the interest of the public. Okay. So they have given their own things and all. Now you could see consolidated balance sheet, the first financial statement, and there are line items which are already there presented. So we could see it is consolidated balance sheet of Tata Steel. Word consolidated would come if there is one or more subsidiary. Please help yourself write down this. The word consolidated comes if there is one or more subsidiary of any company. So we'll see. So in the financial statements, we could see as at 31st March 24, we have assets, and under assets we have non-current assets, and this is a list of it. We have notes, we have page number to that. Notes means notes to accounts prepared to get this number. So property, plant and equipment. What is the reason behind getting this particular number? You have to reach to the same page. So to find out this detail of this number, you have to go to the property, plant and equipment note, which is there on F165. Don't go right now. Then we have the first column, which is the latest financial statement or latest or current year. Then we have the previous year number. So it is always being given, and it is a mandate, it is a part of the presentation of the financial statement, that to show minimum 2 years number for the purpose of comparison. So none of the company, like someone was also mentioning related to ratios and so on. So none of the company gives the difference, gives the analysis, or tells ki this you plus and this you minus, you will get the number. It is the duty of the company to present these numbers. Present these numbers and find out that this is something which is available. It is the person how he or she wants to analyze. What is the purpose of reaching to this particular number? Why you have found it out? Okay. So first comes is the non-current assets. Non-current assets means long-term assets, which have a life of more than 1 year. The second is the current asset. The current asset means anything, you may write down this, current asset anything which has potential to get converted into cash in up to 1 year. To get converted into cash in up to 1 year time. Okay. So this is the first part of the balance sheet, which has assets, and assets has two components, which is non-current asset and current asset. Okay. I'll talk about these line items in a while. Just have a look at it, that what is the value of total assets. So value of total assets coming out to be 273,423.50. And all numbers are in crores. At the top of it, you could see every number is in rupee crore. So consolidated means even if the subsidiaries are here in India or outside the world, even then they have to prepare their financial statements, get their numbers converted to INR and then clubbed them here. Okay, how it happens, what it happens, so the reason for, and that's something which is accounting process. The next part of this balance sheet, since the balance sheet is so large, it is there in 2 pages. So next part is balance sheet continued, which says equity and liability. And when I say equity and liability, it says that yes, equity share capital, we have equity capital which have total equity of 92,432. Then we have non-current liability, current liability, and then we have total. As we know, the accounting equation which says assets are always equal to equity plus liability. Hence we have total equity plus liability, which is coming out to be 273,423.50. So, yeah, So for balance sheet, I'm just writing it down. A is always equal to E plus L, as we know. Okay. So A is always equal to E plus L. Asset is equal to equity plus liability. This concept is known as accounting equation. So you may all write this down for your reference. So we have seen which is the equity liability, and this thing gets prepared. As I shared with you, who is the auditor of this company? PwC, and this thing gets prepared by them. All these financial statements preparation takes place as per the rules and regulations. And those rules and regulations are none other than, I'll just move to the next page, and I'll show you. Those rules and regulations are written on this page, which is page 439. As you could see, the basis of preparation of consolidated financial statements, I'm just highlighting this, of financial statements have been prepared under the historical cost convention, with the exception of certain assets and liability that are required to be as per fair valued, which is Ind AS.
Yes.
Yeah. And we have material policy statement of compliance. Please read this. This is statement of compliance. The consolidated financial statements have been prepared in accordance with Ind AS prescribed under section 133 of Companies Act 2013, read with Companies Act and this. So these are accounting rules and regulations, mandate to be followed. Sure. I'm stop sharing a screen for a sec. I'm sure now you have already reached the same page, correct? Relax. Shall we take a quick 5-minute break? Okay. 5 minute, 10 minute. If I'll say 10, I know that there is no further negotiation. Piyush sir is saying 5. Everyone should back 5. Thank you. Thank you. I appreciate that. Hello everyone. Hello sir.
Gaurav,
Hi Gaurav.
you were mentioning horizontal expansion, expanding in the same or similar business, and then we got cut short on the vertical expansion. Does this horizontal expansion mean, like you said, building another floor on the house, or putting the money in the same business? And what would be vertical expansion then? Acquiring a company, or is that the same as horizontal expansion?
No, Piyush, these are two different. So horizontal, as you rightly said, in the same business, similar business. Second is, suppose Tata Steel comes into, say, manufacturing of cars. Currently, they do manufacturing of steel sheets which are used in cars. So that is vertical. Another vertical I have just opened, like that. And also think about a car company which doesn't manufacture a steel, comes into steel manufacturing or rubber manufacturing. Because every car company manufactures a car, but they do not manufacture a tire. Because Goodyear, Michelin, and other companies, or MRF per se, these are into. So vertical.
Is it called vertical integration, something like that? So,
Yes. So vertical integration happens, Ishad, once you acquire another business into different vertical. That's why we call it vertical integration.
So Mahindra, Tech Mahindra and Mahindra Automotives, is it vertical?
Tech Mahindra and Mahindra Automotives.
Under Mahindra Group.
So Mahindra is a group. Mahindra Group, under the Mahindra Group, there are different companies who take care of different businesses altogether. But if it is horizontal or vertical integration, you have to think not from the group point of view, however, from the company point of view. What company is doing?
So an individual entity related.
Yes. So suppose, because Tech Mahindra got formed after that Satyamwala scam. So Mahindra acquired another company and then it named it as Tech Mahindra.
Okay.
Right. Yeah. I think so. We have discussed good on that.
So can we say it is a product based?
Product based? Not necessarily every time product. Could be product service based both.
Okay. But it is the same.
Yes. So different product, different service.
Okay.
Than your usual business. Hanji. Just like Hero Varied. What for what particular purpose Hero is known as? Motorbikes?
Motorbike. Yes.
Even in motorbikes, not manufacturing tires.
Correct.
Hero Varied has come up. It's a classic example. It's a vertical integration. So, okay, or creating another vertical. So when I say integration means you are acquiring another company to expand. But there's a possibility that you are also creating your own vertical.
Okay.
So
can we consider Hero Wide as a horizontal expansion of their Munjal University?
Because not necessary. Reason is that is an institute. This is retail. However, we do not sell anything related to Munjal University here. And also simultaneously, there is no marketing of Hero Varied in Munjal University. So this is more for professional programs. That is more for university related programs, which is graduations and so on. So their product, services, targets, everything is different. They have created a separate vertical altogether to talk about professional trainings, which are in combination with INSEED. Right, Ranjit sir?
Yeah, got it.
Yeah, okay. I told everyone to explore me and grill me and people are doing it. Thank you. Till the time you are enjoying, I'm enjoying. Right, Piyush sir? Till the time bottoms are firing over है, कोई बात नहीं, लगना नहीं चाहिए बस. Win Commander sir, thank you. Okay, so let's take it forward. I'll just show one more thing to all of you. And then we will move to the slides. Sure, I'm sure we discussed till this part. And there's another thing which I'm just doing a page down quickly. Sorry. We have consolidated statement of P&L account. Okay. So this I also talked about that there is a second statement which is profit and loss account. The word consolidated comes in front of a company which is showing parent and subsidiary company numbers together. The word only statement of profit and loss account would come when it is a standalone company. So no word namely standalone comes up. I'll show you live also. So same goes with this. There are different components which are already here. We have revenue, other income, and so on. So overall purpose of this financial statement is to talk about the profitability of the company, what the company has generated profits. And I guess someone I was asking about a joint venture. Can I get the name, please? Sorry, I'm missing that.
Yeah, Shailesh.
Hanji Shailesh. Shailesh, please, for you. Exclusive for you. Share of profit or loss of joint venture and associates.
Okay.
So this would come, Shailesh and everyone, this line would come only when we are talking about consolidated financial statements. Okay. So the second thing is this, yeah. Then we have taxes and the company has generated say profit or loss. This loss company has incurred, this profit company has generated. This is 4909 and this is 80 something. Yeah, where it went. I'm just doing a page down again. Yeah. So all numbers are in crores. So company has incurred a loss of all 4,909.61 crores in this means then the last financial year. And this is consolidated.
Gaurav, so a quick question. Will all the reports look the same? The look and feel of all the reports of every other company will be the same because it's a standard format which everybody has to follow as per the IND AS standards.
Yes, Irshad. So first, IND AS in itself is like that, which is presentation of financial statements. Presentation means what are the format to be used to present it, and not only the format but the sequence of the line items also. So it is top down what to be kept as well as how to be presented. Okay. So then we have this, which is I'm just moving to the next one. Yeah, we have this statement which is known as the cash flow statement. There are other two statements in between. So, but these are the three main statements. We have consolidated statement of cash flows. We talk about something which is inflows and outflows of the cash and so on. So it gets simultaneously prepared, and hence the final cash which the company has generated over a period of time. So in this case, it is 1 year. So this company has generated, which is cash balance 7080.84. So this is cash balance. I repeat, everyone, please have a look at it. This is cash balance 7080.84. What was the profit of the company? Can someone?
Negative 4,900.
It was a loss.
It was loss. It was negative 4,900.
Yeah.
So the financial statements helps us to understand, though the company was not profitable, but company was not running out of the cash. Company has sufficient cash which the company generated during this year. Are you with me, everyone? Yeah. So please make a note of it. Cash and profits are not equal. This is takeaway from this discussion. This is the reason why I showed you live example. Help yourself write this down, please. Cash and profits are not equal. Cash flow statement. There is a reason for it.
Could you give a live example on this?
So cash flow statement is prepared. Please help yourself write down. Cash flow statement is prepared on cash basis. When I say cash basis, it's just like our own bank account. What is inflow, what is outflow, and hence there is a closing balance. Close of the day, week, month, as the case may be. So cash flow statements, Haji, God bless. So cash flow statement talks about what company generated, mean as a cash means, but where company paid and what company received. So it could be interest received. It could be interest paid. It is not interest due and will be paid. No. So it's just like your own EMI. So if it is due on 20th, I'll share one example, live example with you. If my EMI is due on 20th of February, it is not cash outflow. However, it would talk about that my overall cash would get reduced in the upcoming time. And suppose if it is due 16th, now EMI is deducted. So it is cash outflow. P&L account, which I'm just showing it here, is something which gets prepared on accrual basis. Accrual means due basis. So P&L gets prepared on accrual basis. Means once due, put it in the P&L. Whether it will be paid in future or not, that's something which is different. Even if the sale is done, which I was speaking or talking to Ranjit also, even if the sale is done, though the amount is not received, but the good has been transferred. So realization says even the good is transferred, consideration is done. From my side, the amount is due, or you have put the same thing as an advance, and now I'm supposed to receive the goods in future. So either of them happen. So this revenue from operation doesn't say that this is a cash sale. Haji Piyush, is it okay?
Getting the point.
So revenue from operations is accrual and cash combined, means cash and credit both. That's why it is known as accrual. Due but may or may not be received in this case. So there could be a possibility maybe 1,00,000 crore rupee is cash due, and 1,29,000 is something which is already done as in sales, and hence there are other things. So that's why there could be expenses. So like cost of material consumed. So can we believe that this is something which is paid in cash immediately? There could be a possibility. There could not be a possibility. There could be some amounts at 10% of it is not paid in cash right now. It will be paid in future to suppliers with whom we have say 45-day credit. So even a suppliers also give us some credit. They say that Gaurav, okay, I'm ready to give you the 30, 45 days, 60, 80-day credit because your steel takes time to get manufactured and sold out in the market. I said, wonderful, nothing like it. So there could be a possibility of cash in. That's why it is known as accrual. So not only inflow is accrual, even outflow is also accrual. That's why this P&L account is paid on or get prepared on accrual basis. So this loss is not a cash loss or a cash profit. Are you with me, everyone? So in this, there could be a possibility that how much is something which is reduced in cash, how much is something which is due and to be paid in future. So for example, if I just read it one more time, there is a possibility that I am not generating enough profits this year because I have incorporated those expenses which I have paid or which are due to be paid in near future. So at the end of the day, by 31st March 2024, my position says this, that I would be losing this much of the account or amount this year. Okay, hence cash and profits are not equal and cannot be, because those follows different accounting conventions. One is on accrual basis, another is on cash basis. Open for questions. I could see few people have raised their hand. Shailesh?
Yeah. So inventory and finished good is a part of this revenue from operations, or it will be highlighted in other vertical?
Inventory.
Yes.
Inventory is an asset. Inventory is an asset. Inventory comes here. Finished good also part of inventory.
Okay.
So we have three parts of inventory, Shailesh. One is raw material. One is WIP, which is work in progress. Correct. And the third is finished good. And there is also stores and spares. Correct. So something which is there is a part of spare parts.
Correct.
Okay. Okay. Others, please.
Vishnu.
Anji Vishnu.
Yes. Can you please elaborate a little bit more on the difference and the meaning of accrual accounting and cash-based accounting?
Okay, so accrual accounting is prepared, which is due, which is on the basis of due. You may write it down on simple words. Something which is due, I will write it immediately. I will book immediately.
Okay.
Okay. So, for example, you get your electricity bill, mobile bill, postpaid, anything which is postpaid, Vishu. So, tell me anything which you've been able to recall, something which is due and to be paid in future, which you have not made it. Any name of the utility bill? There must be something.
Property tax.
Property, good one. So per month, this is something which is due. So suppose it is due, what you will do with that? We generally, I'll tell you, what we generally do is something we try to delay it to the last date, isn't it? अभी डेट है आएगा पे कर देगा है ना. But accrual says something which got due today, put directly in the books, so that if someone would like to see your profits, or even you want to see your own profits, then you would be able to see, मुझे ये आज pay करना पड़ेगा, let me subtract it and what is the final position which is coming up. Are you with me, Vishnu? So accrual means due and incorporated today, right now. Whether you will pay in future or not, that's a separate story altogether. That is cash basis. In that case, you will not go with P&L, you will go with the cash flow. That's why it says, na, cash inflows and outflow. Are we good?
Yes, but just a little bit, just follow from this. Basically, I was trying to understand this in context of, say, for example, this financial statement, which are of a statutory nature, and therefore those are historical records. Means, say, for example, this balance sheet and the profit and loss statement and cash flow statement are prepared as, say, balance sheet is prepared as on at the year ending on 31st March, correct? P&L as on 31st March and cash flow as on that date. So at that point in time, when the accountant is making an accounting entry, that is a historical record for him. So then how then this accrual system, because as on 31st March, probably this accrual might have been, the cash might have come in for the credit sale or something like that. So how does that work?
Okay. So I'll share another example with you just to understand it in a better way. Suppose we are standing on 31st March 2024 today. You are one of my customer and you have sold and I have sold goods to you. Okay. And you said, Gaurav, I'll make a payment after 1 week, which is 5th, 6th or 7th of April. Okay. And we have made a sale. So should I incorporate it here or not? Should I wait for 1 week to come? So if I'll incorporate it here, it is counted till 31st March. So till date 31st March tak ka, whatever happened is already incorporated here. Okay. And it will not hit my cash because the cash is not received. It will be received in future. Correct?
Okay, and there is another concept that's event after balance sheet date. So is it not a part of that, which is also separately disclosed?
Yes. So at the time of so at the time of preparing the balance sheet date comes, then we make these adjustments and make sure that this is as per the balance sheet date only, so that there won't be any confusions further. Okay, so the session is not on great on accounting. That's why I'm saying that. Otherwise, I would have started something which is more on accounting. I just wanted to share that yes, these are the terms, these are the financial standards to be followed to prepare it. Right? Yeah. Thank you. Hanji, Ayush. Go ahead.
Yes, so my query is that we prepare a receivable and payable statement.
Okay.
So does that come in the cash flow statement or it is a separate thing?
Ayush, separate thing. Just like ledgers are separate, trial balance is separate. So they are all these statements outcome comes into these three financial statements. Ayush. Okay? Yeah.
Okay.
Hanji Irshad.
Yeah, my question is just to add to whatever you mentioned earlier about you placing an order on 31st and expecting a payment to be done by April 8th. So what happens if that order stays cancelled? You deliver me an item, hundreds of items which I've placed an order, which you already accounted for, and I was supposed to pay by 7th of April. But on the 3rd or 4th, I decide not to pursue with this order. I say that I don't want this. I'm returning the goods back. So how do you get this reconciliation done?
So there's a reconciliation account, Irshad. So you rightly said there's a reconciliation account. At the time of finalizing these statement, once these things get audited, because there will be some more things which would happen, just like the way you mentioned. Suppose some order is cancelled by you. Now I won't be able to show the revenue. Revenue means revenue would be already inflated unless I adjust it, right, Irshad? So in that case, auditor should be rightly informed that what is the status of this revenue, because auditor checks all the journal entries which are being passed and they check the evidence. So if they check that on 31st you sold to Irshad and Irshad has cancelled the same thing, then that particular amount should be reduced from the overall revenue which as in company I am showing it. Auditor will question on this and reduce that amount. Are you with me, Irshad? So these are the adjustments at the time of finalizing it.
Okay, before when you file your returns or
absolutely.
Those days. Okay.
Absolutely.
Okay.
So at the time of finalizing it, and finalization takes 60 days, total 60 days from 31st of March.
Okay, I got it.
That's what I'm saying. Though the results will not come on 1st April.
Okay, I got it.
Auditing will happen. The exam, someone has given the exam tomorrow result will not come. It will take time to get everything assessed, evaluated, and then it will come as a result. Right? Yeah. Okay. Thank you. I could see Hanji. Is there anyone else?
Yeah.
Hanji.
Gaurav, this is for the listed companies. But there are many companies who will do decent turnover and they're not a part of listing.
Sure.
Will their statement also, do they need to file the statement like this, or is CA certified is enough?
So for listed companies, this is mandate. For unlisted companies or private companies which are not listed, this is not mandate, this is recommended. Even though they can follow their own procedure. However, the challenge comes. Sorry, just a second.
And for the listed companies, usually these reports will come after a couple of months.
No, not a couple of months. This will come up to 60 days, up to 2 months.
So, by any cost, they should declare it within 60 days.
Yes, it is. Again, this is a mandate.
Okay.
Within 60 days means generally it comes within 40-45 days. So they keep a buffer of 5-10 more days and so on.
Okay.
Yeah. So for private companies, it is not a mandate. However, it is recommended to use almost the same format. And even if the chartered accountant actually audits says, though they also recommended this is the format you follow, better take it forward. But they are not supposed to present it outside. This is the difference. Since it is not listed, they are not supposed to announce the results. Sure. So, basis these things, let's just go and understand.
So for startups, they will be making it mandatory, I believe, because there will be funding companies or funding investors will be there. So they might not be publicly publishing, but they will be making similar report and circulating between the investors.
Yes, so there is no hard and fast rule for them also to prepare it. However, it is highly recommended to go ahead because investor will say that where are the results? So better show it in something which is listed format. Then it becomes a need of the art for them. Ranjit. So let's have a look at its few terminologies. I'll help you understand these particular things. And there are important terminologies in the upcoming 2 slides. One is income statement terminology, revenue, income, which we popularly call. Revenue is also known as sales, turnover, and top line. 3 words for it. Revenue is also known as sales, turnover, top line. So top line is not accounting word, top line is marketing word. But there was someone who is from the brand value, so we understand that yes, it is a marketing one. Other income means the company is generating another income from other sources which is outside the primary mode of things, which could be regular in nature. For example, company has invested in some bonds and debentures and they are getting some regular interest payments, royalties they are getting, and there could be possibility the company has given their land to someone or property and it is being there on rental, hence so they are getting some rental incomes. There could be possibility for that. Gross and net revenue, it's simple. That typically presents by manufacturing entities with overall gross returns deducted for returns, discounts and duties. But now this line item doesn't exist. As per IFRS, we write it revenue means revenue, which is net of any discounts, duties and so on. Then we have cost of material purchase and we have changes in inventory. And then we have employee benefit expenses, selling journal administration. Employee benefit means the salaries, wages, PF, ESOPs, which we actually give to them. Selling and journal administrative expenses, these are operational related, commission, promotion related, rent, admin costs, and operational related expenses, including costs. R&D expense, which costs attributable to the research efforts and so on. And then comes few more expenses, which we generally call it a non-cash items. So when I say non-cash item means depreciation and amortization are non-cash items, because these are the items which are never ever to be paid in cash to anyone. It is just an accounting adjustment. Like I'll show you here one more time. Like we have revenue, other, and we have cost of material purchase, employee benefit, finance cost. Finance cost is interest expense. Then we have depreciation and amortization. So depreciation and amortization, though it is a line item and an expense, however this comes here only because of the reason that we want to show the right value of an asset after depreciation. And when I say this, sorry, it means property, plant and equipment, specifically plant and equipment. On this plant and equipment, which is this amount, the depreciation is already deducted. That's why it is net of depreciation amount. How to show the reduction in this value? We reduce it as an expense, that the value of that same asset is reduced because of its usage or passage of time or both. It is never ever to be paid to anyone. It's just like your own car value. Even if you drive for 1,000 kilometers or 10,000 kilometers or 1,00,000 kilometers, this would come up as an expense. However, you're not supposed to pay this depreciation to anyone. Yes, you would be helping yourself to reduce the amount by showing its value. Yeah. Hanji Ayush, please go ahead.
How do we calculate this depreciation and amortization cost?
Though there are 4 methods, but there are 2 popular methods. You may write it down. One is written down value method, WDV, and one is SLM, which is straight line method. So straight line method is simple, which is, say an asset has a value of lakh rupee. It has a life of 5 years. So a lakh divided by 5 will give you 20,000 depreciation every year. Okay. Followed by, if you have a 20% depreciation rate, so it would get calculated basis the value in next 5 years. For example, just like our own car value gets reduced. So it is not basis straight line, it is basis reducing balance. So suppose the car has a worth of 10 lakhs. 20% depreciation, which is 2 lakhs, will reduce it to 8 lakhs rupees. Then on 8 lakh, it would be 20%. Are you with me, Ayush? Followed by, on the remaining amount, it will be 20, 20 and so on. But last year, mein kya hoga? Last year, it will be completely eroded. Means completely, fully depreciated. Otherwise, so mathematically, तो आप उसको zero नहीं कर पाओगे, right? So 2 popular methods are there, and in this depreciation note, you will also find that which method is used. So that was the whole purpose, everyone, that to help you all to understand that if we have the financial statement with us, we should be able to deep dive into it and find out our relevant information from that. So then we have income statement terminologies further, which is finance cost, current taxes, deferred taxes and all. And then comes the most important part, which is this, and this is the last slide. So feel good about it, okay? So few terminologies, income statement terminologies. First is gross profit. Profit by netting off operating revenue against direct expenses. So it is nothing, it is revenue minus COGS, cost of goods sold. I'll write it in an Excel. So gross profit was a popular term earlier. It is already there in US companies or for US listed companies, but not in Indian companies. However, this must be calculated by every company which is into manufacturing. So it is revenue less COGS, cost of goods sold. Profit, which is in gross format. So this is revenue minus the direct cost of manufacturing the product and selling it also in the market. That's why it is not cost of produced, cost of good sold. Sure. So if I just put revenue, yeah, put it on mute.
So in this COGS, what are the things it will include?
Sorry? So COGS?
Cost of goods.
Yeah. So as per this, I'll show you the example I was about to. So cost of goods sold would include cost of material consumed and purchase of stock in trade. These 2 numbers would be included. Help yourself, everyone. Please write this down. So if I want to just calculate it from this, so hence my revenue is this, which is 2 to 91 this. I'll just do a live example in front of you. You all can also perform it. And cost of goods sold will come, which is this plus this. You may help yourself pen this down. Enter. So what would be the gross profit? We popularly call it GP. The gross profit in this case would be this value minus this value. Enter. So gross profit would be simply revenue minus the cost of goods sold. And there is GPM, popularly known as gross profit margin. And how it gets calculated? Gross profit divided by this. Gross profit divided by revenue. Don't multiply with 100. I'll show you how to put it. Gross profit divided by revenue. Once you press enter, you will get one value, which is this. And take your cursor to this particular symbol, which is percentage, and increase its decimals. So hence we have gross profit margin. Okay.
Excuse me, sir. Can you repeat it? Can you repeat the GPM?
Yeah. So should I show you the calculation? Yeah. So gross profit margin is nothing. It's revenue minus cost of goods sold. And then we have GPM. Then we have GP followed by GPM, which is gross profit divided by the revenue into 100. It's coming out to be 50%, 57%. Higher this is good or lower this is good? Can I hear loud from everyone?
Higher only.
As higher as good. Even in Shark Tank also they ask what is GPM, what is EBIT, EBITDA and all other stuff. Correct?
Any number with closed bracket is danger.
Sure. And the next two. So if you have another 2, 3, 4 minutes, we can close. Shall we extend by 4 minutes? Will that work, everyone?
Yeah.
We'll do sure.
Yes, sir. Yes, sir.
We would have liked it to be longer.
Sure, sir. Let's have a longer flight, sir, next time. We'll go for a longer one. Thank you. So the next part is this. I'm sure we are clear with the GPM. The next part is EBITDA and we have EBIT. Let's talk about EBIT first. EBIT, which is operating profit post non-cash adjustment. So what is EBIT? Let's just write down full form here. I'm also saving this. Let me just save this. This is 16th.
Earning before interest and tax?
Yes. This is SM 10 and yeah. So EBIT stands for, if you know, okay, else I'll write it here. Earnings before interest and tax. EBIT. So EBIT is also known as operating profit. So profits from operations. So EBIT operating profits, profits from operations. So is this something which is available? So from or as an investor or from the investor point of view, from the owner point of view of a company, from a business standpoint, for everyone, this is so important that I should know how my company is performing. Performance means performance ratio. Performance ratio means EBIT or performance number. So gross profit helps me to understand how much margin I have generated only subtracting the direct cost. But what is the overall performance? These are the profits which are before subtracting interest and taxes. That's why it includes all the other expenses which would have been incurred at the time of performing or executing it or doing the business. So is there any direct number here like EBIT? Can someone find out operating margin or operating profit or EBIT?
Line item number 6.
Line item number 6. Acha. 6 says profits before exceptional item and tax. Is it? Okay. So is this EBIT? Just have a look at it, everyone. How this is calculated. There is an easy. So please put it on mute and just understand it. It will take hardly a minute. Total income is this. There are total expense. So from total income, which is this and total expenses. So it says, which is 3. So 3, just have a look at it. 3 plus 4. Sorry, minus 4. Here it is 3 minus 4, correct? Minus 4 is this total expenses. While calculating this particular thing, I have subtracted all the expenses. And what is finance cost? Finance cost is none other than interest expense. Please help yourself write down for your reference. So finance cost is INTEXPS, interest expense. So while calculating, have a look at it please, while calculating profit before exceptional item and taxes, I have subtracted all the expenses. What is included in all the expenses? Cost of material, purchases, employee benefit. Finance cost is also included. D&A is included and other expenses are also included. It means while calculating this amount, which is 6667.04, don't you think so we have subtracted all the expenses? Are you with me, everyone?
Yeah.
Yeah? Which includes interest expense. So while calculating EBIT, while calculating EBIT says post interest expense or pre-interest expense. It is pre, means before deducting. Correct? So our starting point is this. We call it profit before exceptional item and taxes. PBET. We call it PBET. Profit before exceptional item and taxes. We take this number. And since this number excludes interest expense, what we'll do, we'll include interest expense back. We'll go backward to make it EBIT. So suppose if I'll just make this thing correct, if I'll just put it add here, and if I'll just sum them up, what this will be known as. Can I hear loud please from all of you?
EBIT.
It will be known as EBIT. Correct?
Yeah.
Thank you. So this is not a direct number being presented as per the Ind AS. They say you help yourself calculate operating profit. Operating profit is important to you, not from Ind AS point of view. They say it this way. I said, okay, we have a way to calculate it. Let's calculate it. Okay. So this EBIT is here, and these are the core. This is the operating profit of the company. And what is the EBIT margin? So what we'll do is we'll just simply take this divided by revenue, enter, and we will change it to percentage and with 2 decimals. So we have EBIT margin means operating profit margin. See, from gross profit margin, it has reduced drastically to 6.19 in case of this margin. Vishnu, I'll take up a question. Let me just complete this last part. Thank you. And the last part says, which is this. If you add back D&A to this, let's go and add D&A. What is D&A? D&A is this. I'm sure everyone is doing with me. I'll just write D&A. We popularly call it D&A. Get comfortable with this jargons also. Depreciation and amortization. Let me just add it here. And only the summation of this two. Summation of above two, bracket close. So now I have in an EBIT, I have also added back D&A. It means whatever got subtracted as a D&A, not this is added back. Now it will become what? A popular term?
EBITDA.
EBITDA. What happened? Yeah. So it is popularly known as EBITDA, earnings before interest, tax, depreciation and amortization. Very popular term. So core operating profits including non-cash item. And let's have a look at it. Let's divide this EBITDA with this, which is revenue. Get the percentage, and the company is playing with some margins. Wonderful. So I'm just saving this. Let me know. I'm taking a pause. In fact, I'm done for the day for this particular topic. Let me know if you have any queries. Feel free to. Now the stage is yours. Yes, Hanji Vishnu.
Yes. So basically, EBITDA is the net operating profit, we can say. Is it the understanding correct?
No. Net operating profit. No. We only call word namely operating profit.
Is it gross operating profit?
So words like gross and net, don't get carried away with that. Only call it operating profits. So those were the old words which are prior to 2016. Now we use operating profit and core operating profit. Core, C-O-R-E. Core operating profit is EBITDA. I'll just write.
So what is the so Professor, what is the basically relevance for these two terms for investors? Say for example, I'm invested in a company. So I will look for more of a banker's perspective also. Can you please elaborate this in these two contexts?
Yes. So from the investor point of view, don't get carried away with GPM, जो हमने ऊपर calculate किया होगा, which is 57%. Yes. From the investor point of view, it is very important to know that how much company is able to generate from its core competency. For example, how much company is generating while selling the steel and steel related product because the company is Tata Steels. There could be a possibility that company has a land and the company has sold out that land for 400-500 crore profits. Are you with me, Vishnu? So is this the core competency? Answer is no. Company had some assets, company sold it out. Core competency? Answer is no. I'll share one core competency example. I get salary, so that is my basis, my core competency. This is my annual package, ABCD number. Suppose I have a house, I'll sell it outside and I'll generate 1 crore ka profit. Is it because of my core competency? Answer is no. And is it repetitive? Again, answer is no. So, everyone, EBIT talks about what you have generated from core competency and must be seen. Should not be ignored, must be seen. However, out of this core competency, you will not be paying one more expense, which is D&A to anyone. It's just a non-cash item. That's why add that same thing back. And hence, what is the core competency, including non-cash item? That is the importance of EBITDA, everyone. Importance of EBITDA. So I don't get carried away with even EBITDA. I see what is the EBITDA, what the company has overall profits, which is available to them. Yes, please.
Yeah, so Gaurav, so essentially, like just you mean to say basically whatever is the profit earned from the operating business of the company is EBIT, and in addition to that, if the other income is also added back to, and the depreciation and this also added, is also EBITDA.
So operating business plus non-cash item. That's it.
Okay. Say for example, income from other sale of some asset or something like that.
No, not that. No, that is exceptional. आप देखिए ना. Okay. Please, हाँ जी, Vishnu, please have a look at it. See, हमने यहाँ पे लिया था ये वाला amount. Can you see that? After this, there is exceptional item. See, profit on sale of this. So we are not going to incorporate this. Okay. This is above, not below. Second is your net
So
income.
if I am a banker, a creditor to the company or investor, so which I look for actually, which figure I should look for, which is and how it is more relevant for me as a banker or as an investor, equity.
This one. Right now, this one. Which I have highlighted.
Okay, EBITDA. Okay. That's why the bankers. Okay.
Everyone focuses on EBITDA, not on. There is no exception. Yes, there are more parameters also, but this is first thing to look. This is not the only thing to look. Okay.
Okay. Thank you so much.
Okay. Hanji, can I see some more? Get some more? Yeah. Any other queries, please?
So Gaurav, I have a query.
Hanji Siddharth, please.
Is there any circumstance or a business, because I'm facing this dilemma right now within my company, where the interest and the depreciation would be taken as a part of operating expense?
Okay, and it is?
The thing is, we are into providing services where whatever IoT assets we give to our customers, they are depreciated over a period of time as per the WTV value.
Yes.
Now, in that case, will we take the interest and depreciation as an operating expense, or will it still be at the bottom as an independent interest and depreciation?
Yeah, it should be the way it is. There's no change in the presentation and there's no change in the concept. It should be the way it, right? So no exception to it. So which business you are into? I forgot to. So we are into business which is?
So Gaurav, I'm into providing security services.
Security services.
To be more precise, I'm into e-surveillance services where your CCTV camera security systems are being given on EMI and is monitored from a command and control center. So since that is going on EMI and I'm charging the customer for the interest and the depreciation expense as well. So within my team, my finance team feels that we should be putting it as a direct expense. So I just wanted to take your opinion on that, whether it should be taken as a direct expense in this case, or would it go as a standard way which we are representing it?
So just message me separately. I'll help you understand. Will that work? I'll share my number. You can connect. No worries.
Sure.
Thank you. Anyone else has any other query? I'm stop sharing a screen. Okay. Yeah. And let's connect everyone. Yeah.
So, for example, if the standalone result of the company is not that good, but the consolidated looks better, so what does it reflect on that specific company? What do we think about their core competency, if I may say?
Like Ayush, in this case, I have not even, so I didn't get a chance to touch the standalone right now because of the time constraint and so on. But if you'll see, Tata Steel standalone is way much better than the consolidated, and it is profitable. So actually, Tata Steel standalone has helped company reduce further profits. Consolidated companies incurred losses. Okay, and their losses got absorbed by standalone company, which is Tata Steel, which simply says, Ayush, that Tata Steel is not dependent on subsidiary companies. It is the other way around, and it is always the case. So even if the consolidated your loss, it's okay. It is one of the case in the year, and profit and loss are part and parcel of business. If it is continuing, Ayush, that is not healthy sign. Second is, if your core company is generating losses, again that is not an healthy sign. Just like a parent company. So we must watch, like the way we saw consolidated, Ayush, also click on standalone and see what sort of profits company has generated. Calculate these three ratios, you will see that your eyes are further opened, or maybe your question is answered.
So if the parent company is concurrently producing a negative result, that is a negative sign, even if the subsidiary is doing well individually.
And it's a sign that subsidiary has an opportunity to acquire parent.
Yeah, exactly.
It also happens upside, na? Hamesha downside nahi hota na, dost? Right? Renbaxi and Sun Pharma. So actually they also did the same thing. Many more companies.
Reverse merger.
Reverse merge. Okay. Hanji, pleasure. Anyone else has any other query?
In the previous professional and P&L account, that we have observed that they have declared some 4.9k CR loss.
Yes.
Okay. And similarly, there is a approximately the similar amount there is deferred in the cash flow. Last year it was some 12k and this year it was 8.5 change. Actually, as an investor, this balance sheet or this P&L account, how it will impact what are the actual factors that impact the share price? Because when this kind of declaration is happening, what will be the momentum of the share price like?
So it's a very open question. I understand that. And there are both internal and external factors, Ranjit, which impacts. Indian stock market is highly sensitive, less on facts and fundamentals. So even tomorrow, day after, if there is a news related to Tata Steel has incurred a loss of 10%, people will start selling even without seeing the numbers. Whether it is consolidated, standalone, people will not go into that. Are you with me? Because even at the time of investing, they did not. Now even this thing also doesn't bother. This goes as a news, as a warning to them. Bow, now exit. Now think about it. Company like Yes Bank declares a 22% profit. Even without a banking knowledge, people start entering into it. So, and there are many factors. And I just say it in summarize in this way. My one subject result will not tell my overall performance. Never. Even if I've scored 95 in say English or mathematics, it will not say that I'm topper. I could have earned average, or my another subject where I've earned 60 will not talk about it. I'm an average performer or a below performer. Let me see from the holistic overall point of view. So in the upcoming sessions, we will also learn that how to see the financial statements from its in-depth point of view and how it impacts the overall value and decision making. So from the purpose of investing, from the purpose of anything else.
So is it the PE ratio you're going to discuss about in the later classes? Because that's the one normally people talk about when they're investing into.
So not only PE ratio, I guess.
One of the factors. Yeah, one of the factors.
So that is one of the ratio. That's what I'm saying. It is one of the subject out of the 15 subjects which we'll be learning.
Okay.
So like take it that way. And someone also mentioning profitability ratio, solvency ratio. These are all the ratios which must get calculated at the time of investing from a sound investor point of view. If we are a day trader, I just want to add to this thing. If you are a day trader, means we are investing and or a speculator, then there is no point in doing this much of hard work in a fundamental analysis. Investor means a person who invests for a long-term period, generally for 1 year and more. And once you're investing for a long-term period, in that case, keep one thing intact, that I have seen and understood the financials of the company related to its health, profitability, cash, and couple of more. And not only was doing some financial statement, but also doing the detailed analysis of the company, doing with the help of financial ratios. Yes. More questions, please. Are we good for the day?
Gaurav, can we have a contact number possibly so that if there is a question that we can post to you later?
Yeah, so I'll also share, I'm not there on the LinkedIn, but I'll just share my number.
Yeah, we were trying to search you on LinkedIn as well. But
yeah, I'm open. I'm available. I got 2 LinkedIn requests right now.
Oh, acha.
Yeah. Anyway, so you may search it with.
Can you please share your LinkedIn profile, maybe, because I have a lot of Gaurav Arora.
Search with Gaurav Arora, Grant Thornton, like that. Grant Thornton.
Were you also part of a Nordex group?
Not right now. What is that?
Earlier, okay. Thank you.
So, thank you all of you. I hope we all enjoyed this session. I didn't realize it is 5:23. How was the session? Hope the space was good.
It was quite very helpful.
Thank you so much.
For novices like us, yeah.
Sure. Thank you so much, everyone. Thank you so much for your participation. Lovely participation. Look forward to meet you.
वो नहीं, अरे यार रिकॉर्डिंग चल ही रही है ना।
कहाँ पे?
ये लाल बटन दबा